So it's been a couple of months since we had a look at my UK dividend portfolio on the old Freetrade app. Remember, I started this one back in October last year, so it's not been running for any really long length of time, so definitely shouldn't be judged on that. But surprisingly, it's done pretty well. And actually, we've seen some pretty good growth from UK FTSE 100 companies just in that really short space of time. And I don't know if I should say it or maybe jinx myself, but UK companies may be going back into fashion, at least those kind of value growth companies. Certainly when we compare it over to the US with hypergrowth and everything going on at the moment, things in the US are turning out to be a little bit on the downside at the moment. Certainly if we look at the opening of this year, has been pretty terrible for all of those growth stocks and even the big tech stocks as well, which a lot of them are in my other portfolio, which one day I'll show, but at the moment it's a bit of a bloodbath. Anyway, before we jump into this one, just remember that this is just a small part of my portfolio. I've used Freetrade. I'm just using the free part of the account. It's not in a stocks and shares ISA or anything like that. So just bear in mind that I would be liable for any taxation on this account. But because it's quite small and really the average is about 4 to 5% worth of dividends, that's going to fall well into that £2,000 per year limit that you're allowed. And just remember that. Outside of that, I'll leave taxes all to you depending on what you're doing at the moment. But UK dividend portfolio. Let's have a look what we got inside. So total in this account, remember I started out with £1,000 and then I have just added little bits and bobs over the weeks, over the months, not necessarily based on any kind of fundamentals, but I did just want a dollar cost average into all of these different holdings that you've got on screen at the moment. So very quickly, one of the first things to do, and one thing I quite like about the Freetrade app, to be honest, if we go into insights and then we just click on portfolio performance and let's adjust this to about 3 months, how long the portfolio's been going for. What's pretty cool is that the weighted return of this portfolio and this basket of companies has actually way outperformed the FTSE All World, which is a kind of really nice index to be able to see if we're actually on the right track or doing pretty well. Of course, that's just a really short period of time, but it does say something potentially about the quality of the companies in this portfolio. Anyway, what I want to do, rather than going to go through every single one saying how good I am clearly as a stock pick or anything like that, that is complete nonsense. It's just too short of a period of time. More importantly, I thought let's just look at several of the different ones, see if we have any news that's come out on them and why they might have been doing so well in this portfolio in just a short period of time. But very briefly, let's run through some of the headlines anyway. You can see HSBC, Tesco, Diageo, BP, National Grid, Legal & General, Aviva, Rio Tinto, Unilever, Vodafone and GSK. And as you can quickly see, scanning the green and red numbers, the only thing on my portfolio that was actually down was Unilever. And that, of course, has only happened very recently because of all the takeover stuff between Unilever and GSK at the moment. Otherwise, we were all green and I thought I was an amazing investor for a very short period of time. Anyhow, a quick one on maybe the top 3 winners. So HSBC, surprisingly, so if we just jump into this one now, we don't get any news on the app itself on Freetrade, so you do need to go outside of that to actually find out what you're looking at. It's a highly profitable company. It's not going anywhere. It's not exactly going to be growing revenues and growing profits consistently, but it is going to be consistently delivering an amount of profits, and of course it's a quite high paying dividend too. Some last bits in the news on this company, you had them looking to buy out China Life Insurance, and of course we know that HSBC want to continue being a big dominant force in that Chinese market, which of course is massive, with a huge amount of very rich people there looking to use them for wealth management and such. So long-term hold for us, certainly. The share price, if we have a look over the last year, it's been relatively okay, up 22%. I think we are going to see potentially this banking sector take a little bit more absorption from people selling their high growth tech stocks potentially and looking maybe to get a bit of a safer play, but who knows? You have to do all of your own research to find that out, and nobody knows, because if you look at the max charts in 2017, we're down 25%. But again, have a look at the financials yourself, see what you make of it, and you'll see lots of very positive numbers. And again, if you sold everything in this company, you'd still have some money left, so they're making a profit. Imagine that these days. Fundamentals are important. Quick recap on the stats. It's over £100 billion market cap, and dividend yield is 3.17% on HSBC. So a quick look into GSK, our second biggest performance in the portfolio for percentage-based increases. And one of the reasons that GSK saw a little bit of a bump was that Unilever had a now failed bid of £50 billion for their consumer healthcare division. So that looks to not be going ahead now, but basically that caused Unilever's share price to go down and GSK to get popped up because people thought they could make a very quick buck and a quick win. But as you see over the last month, you'll see a big increase, and it's actually gone down a little bit now. back to normal and all the speculators can go home. But some quick recap on this company. So look, we're up over 16% over the last 6 months overall, which is pretty good. Slow and steady growth. Again, you're not going to actually see any massive jumps in this share price. If we look back at some of the annual reports, we'll actually see quite a nice slow and steady growth in terms of revenue and net income. Again, it's a highly profitable company, and high level, we have an £82 billion market cap with a yield currently at 4.89%, which is very nice indeed. And this is something I might touch on later, but of course we are entering an era of very high inflation and rate rises, and really, I guess if you're going to be doing any kind of stock picks, potentially we need to think about inflation beating stocks that we might be able to actually utilize, and companies like this with very, very strong brands should be able to increase those prices regardless of what the kind of macroeconomic looks like around the world. So just bear that one in mind. So third place in the portfolio in terms of percentage increase is everyone's favorite, or probably one of the most boring stocks in the portfolio, to be honest, is National Grid. So they're a gas electricity supplier. You'll be very familiar, no doubt, if you are already living in the UK, and they do have a small foothold in the eastern part of the US as well. Now, of course, with the nature of this business, it's not exactly going to grow anywhere, but it can be a very, very steady dividend payer because it operates in a very highly regulated market. We know, of course, that you can't stop paying your electricity or your gas bill. And then also we've got the potential that this is an inflation-proof stock as well. So, of course, as those prices increase for energy that we've seen, again, we're unlikely to see a decrease in their revenues or their net income, because they're going to have to pass those prices onto the consumer, or of course the government may have to step in and support them at some point too. So it's not something that's going to grow anytime at all very, very quickly, but of course we've got a healthy dividend yield here of 4.52% with a market cap of £40 billion. So that's our top three. A quick look at the other movers though, some notable names here. We've seen BP, of course, with oil and energy prices have quite a little bit of a rally. They're up over 11% in the portfolio, and some really nice moves from the likes of Rio Tinto, which was a recent ad, which I did in November, and Aviva. Of course, that mining sector, very profitable at the moment. Of course, it's going to be very cyclical and depending on those commodity prices. But again, they're a very high dividend payer. I know they paid out a special dividend too, so their yield will be all over the place, 11.22% apparently at the moment. So looking forward to getting a little bit of that. In terms of anything else, there's nothing really that stands out here because these are all quite safe companies. Now, originally when I got the portfolio together, the whole point was to have very, very safe companies that have been paying out and increasing their dividends for many, many years, and also from different sectors too, which pretty much gives us a full level of diversification. Now, just a disclaimer, most of my money and a lot of my other funds are in wide, broad index funds in the likes of the S&P 500. So this is just a play portfolio for me. However, at the moment, I'd be very happy, at least over the last 3 months, to put pretty much all of my portfolio in all of these different companies because they are going to be pretty safe. Yes, they might not get that 20, 30, 40% growth of some of these high growth stocks, which you'll see online a lot these days, but then look at the likes of Peloton and what just happened to those. And look at the likes of Palantir. Look at the likes of all of these growth stocks which have just been hammered recently. Unless you're going to be buying into them for the very, very long term, because you are relying on that story they can tell you to actually deliver a profit in the end. Remember, lots of these companies already have a track record, so you can go back over 10s and 20 plus years of financial accounts, see them generating revenue, see them generating profit. Any other reasons why we might be up in the short term? Well, we can have a little bit of speculation anyway. We've got the Wilshire Index, if we have a look at that in the States, which tracks different growth and value companies. We are seeing growth take a little bit of a turn recently and value going up, as investors are scared in the world of inflation and of course the different rate rises, which have a much bigger effect on those growth companies as they're looking to scale their business, as their price of their credit grows, and of course future values of their cash flow get discounted even further. But the companies that are safe and they're going to look after your money and have demonstrated a track record of dozens of years are the ones that investors seem to be at least gravitating toward just a little bit. But again, in the short term, anything could happen. Who knows? If you just invest your money in an index fund every month, you don't have to worry about all of these things. You don't have to get stressed out. But that is at least what looks to be happening in the short term. Could it be a long-term trend for the whole of the year? Who knows? Growth and value throughout the years is just like an up and down, whatever's popular at the time. If people think they can make money in a market and just going after growth stocks, which don't make a single cent of profit, then that's absolutely fine. But on the value side, you've got companies that are going to keep coming back and keep delivering the value for you. Slow and steady growth, what's not to like? Anyway, that will wrap things up for the Freetrade dividend portfolio. Just some questions out to you guys. Is there anything I've missed here, do you think? Are there any absolute clangers I've made in the video? I'm not looking to necessarily add any more stocks to this. I think I've pretty much covered all of the major sectors in the market. And of course, I'm not going to be adverse to adding different shares, but really I'm just going to be nibbling away bit by bit as I get some money in and as I just upgrade my portfolio to just grow this one over many, many years, probably over decades. And it'd be really cool if I could actually do it all on video, all on YouTube, so you can see either my amazing genius in a few years' time or my absolute complete new beginner mistakes on the dividend investing side. Either way, let me know in the comment section below how you're getting on with your own dividend portfolio. Is this something you want to get started with? If you do want to get started with Freetrade, don't forget to use the link in the description below. You will get a free stock. I might not get one depending on how many free stocks I've already had, but very, very kind for everyone for using the free link so far. And any free shares I do get, I immediately sell because they tend to be around £3, and then I'll just gradually put them back into this portfolio. Anyway, I really hope you've enjoyed today's video. Thank you so much for watching. Drop me a big fat like if you have. Subscribe for many more, and as usual guys, happy investing.